Well, the market just really couldn't gain any traction today after fending off some early weakness. Your major indices just couldn't get it into that next gear, although a lot of intriguing action within the session itself. Retailers, for instance, written off earlier this year, continued to stage remarkable rebounds, suggesting that brick and mortar has survived the Amazon onslaught. Now, of course, it may be too early to say, which old retailers are out of the woods, but keep in mind, 20 bankruptcies this year has thinned out the herd, and today's winners included Kohl's, Macy's, Foot Locker. Foot Locker was absolutely written off 2 months ago. Stock has come back nicely. By the way, speaking of increasing talk of infrastructure, material names continue to look absolutely phenomenal. Freeport McMoran breaking out, U.S. Steel, both all those names are breaking out big time. And then there was crude oil, which was really the big winner. It's been on a really wild ride since the prices collapsed. Remember a couple of years ago, Saudi Arabia declared war on America's fracking miracle. Well, it wasn't long ago also this year when the oil mavens, well, maybe last year, they were talking about a two-handle for crude oil, which means that it would trade in the 20s, like $21 a gallon, a barrel rather. Well, you fast forward, and right now West Texas Intermediate is on the cusp of trading with a six-handle, up $1.50 today to its highest level since June of 2015. Several runs towards 60 have been thwarted, though, this year, and the real breakout probably comes north of 62, but I continue to say you must have exposure. Now, on one hand, you can play it safe with a big name with a fat dividend like a Chevron, but also smaller names with great exposure to the Permian and Eagle Ford Basin, I think, should be in your portfolio. And speaking of oil, in Texas today, you had the Dallas Fed release its December manufacturing data. The report was absolutely strong. All the components, all the segments doing extraordinarily well, lifted the overall number to its highest level in 11 years. And there's a lot of talk about prosperity overall in America coming back these days. We should be excited about it. But we also do have a persistent problem with poverty, and it's lasted through various administrations, only partially improving since that so-called war on poverty was launched by Lyndon B. Johnson. Remember the Great Society. That was in August of 1964. While the left has been ripping Senator Tim Scott last week for being the only black person in that photograph in the tax bill celebration, they have seriously overlooked the work that he and his colleagues put into place to address the issue of poverty. And that's why I brought back John Burnett, because, John, you understand, you've been meeting with some administration officials on this Investing Opportunity Act that Tim Scott worked on for a long time with folks like Cory Booker, Gardner from Colorado, folks across the aisle. And tell us how this ended up being part of the tax bill.
Well, Senator Scott went to President Trump to give him an overview of the Investment Opportunity Act. And, you know, President Trump, he's a smart, successful businessman. He understood the tremendous value that the bill would actually bring to the urban distressed areas. And he said, you know what, we're going to make it part of our tax reform bill, tax cut bill. So it was folded into the overarching GOP tax bill. And you know what, Charles? It hasn't been getting a lot of credit.
This is something, if Cory Booker, honestly, if there was a Democratic president, Cory Booker put this in there, he'd have been elevated to next in line for the presidency. I mean, this is the kind of thing where, and it's not just urban, though. This is what I like about this. As you go back last year, when Tim Scott started talking about this, he had Dan Sullivan come on, and he talked about how it would help the local area. There was no infrastructure. Plywood costs $100, milk costs $20, all because it's so hard to get this stuff to them. Steve Daines from Montana, he talked about Indian country. He said the Northern Cheyenne, unemployment at 56%, the Blackfeet Reservation at 75%. This isn't just about urban America. It's about rural areas. And if you remember the Great Society, when Lyndon Johnson signed that in, the first place he went was to Appalachia. He took a walking tour to Appalachia. Absolutely. Appalachia hasn't changed much, except it might be worse with the opioid epidemic. So to have Tim Scott and others focus on this is absolutely remarkable.
Absolutely. You know, we're finally at a point where we're passing legislation that is pro-growth and outside of government control. So what do I mean by that? One of the main points of this bill is that it takes the power outside of D.C. D.C., of course, sets the guidelines for the opportunity funds through the Treasury. However, each governor will have the latitude to define what areas are distressed in their state. And like you said, it'll be some areas in the urban metropolitan centers as well as the rural areas. Then the tax breaks are phenomenal. It's private capital. They're incentivizing private capital to invest into the fund, and the tax, the capital gains are deferred from 5 to 10 years.
Right. So it's attractive to private investment. It's
Absolutely.
not government controlled.
And
it
no
will
tax
focus,
dollars.
And it will focus on local economies that
Absolutely.
need it and that have not gotten it for many, many years.
Without gentrifying it.
Thank you very much, John. Appreciate it.